Let's start with Treasuries, where we've got a sell-off this week that has pushed the 10-year yield to an 8-week high. Granted, we're talking about 72 basis points versus, say, 95 basis points in early June. But this felt like a significant shift. In late July, you had said that markets could drive rates below zero, even without the Federal Reserve setting a negative rate policy. What's your read on the recent rise in rates, and are the drivers for negative rates still intact in your view?
Well, Scarlet, some great questions. The first thing is that the seasonality here for bonds turns negative. Traditionally, the bottom in yields for the next couple of months is the second week of August. So the sell-off arrived right on schedule. I'm not surprised, but having said that, we have a pretty good support on bonds and in terms of our 10-year notes and in terms of getting rates above, let's say, 1%. I don't think that's very likely. As far as the negative rates are concerned, I'll tell you, the Bloomberg ran a fantastic interview today with Lacey Hunt, and he points to a lot of the same things I do, which is that there's a lot of deflationary pressure. All the debt piling up out there is essentially deflationary. And our models, which have been reliable for the last 35 years, basically indicate that we should expect that between here and, let's say, the next 18 months or so, that we would see the 10-year note go to negative half of 1% or negative 50 basis points. But the estimate range is between negative 2% and negative 1 or a positive 1. So, we have never missed hitting the target number in the model. And as a matter of fact, we've never failed to overshoot to the lower end. So, I still remain bullish on bonds longer term. They don't represent good value. They give incredibly poor returns, but the pressures in the economy look like they will ultimately turn back to negative, whether it's in the fall because we don't have stimulus packages, or whether it's longer term because we've done some real permanent damage to the economy. And it'll take a long time to get everybody back to work.